Hey guys, so I want to take a quick look at Cardano. The ticker for this is ADA, and I'm currently on the weekly time frame. Now, before I get into this, I should mention that if you're not subscribed and you want to be able to find this channel again in the future, just click subscribe, click the bell, and then click on all. If you don't do that and you click away, it's probably going to be hard for you to find this channel in the future because it's a small channel, only around 600 subscribers, and because of that, I'm not usually prioritized in the search algorithm. Okay, so I've done, I think, about 2 analysis videos on Cardano in the past. Now, if you haven't watched those, I'm just going to give you a brief rundown of what I'm seeing here. So on the macro, basically, we have this falling wedge right here, which we've broken out of. And basically, when you break out of a long-term downtrend like this, typically the price will kind of come back and retest it. We did that twice. So you see, well, we did that more than twice actually. See all these candles, which basically a retest of this downsloping level of resistance. Now this was served, well, it successfully served as a level of support now. So we flipped this resistance to support and we retested it again right here. See this wick came right down, touched this level. So yeah, basically we broke this, retested it, and now we're kind of making our move upwards. Now, in the last video I did, I think the thumbnail looked something like this. Hold on, let me see. Yeah, it was basically I showed that we had this resistance here, right? And it's like a ascending triangle formation, which is a bullish pattern. So you have like higher lows, and then you have kind of equal highs here. And that just shows that the buyers are gaining strength. And then eventually it pushed up. We came back down. And yeah, this is around the time when I put out my last video, and I basically just said that, we're testing this previous level of resistance here as support. Now, we also have this upsloping level from this ascending triangle that I just extended it all the way, and the price was responding to this as well. But Bitcoin dumped, and it took the altcoins along with it, right? So now we broke this this resistance. It was support, and now it's resistance again. I know it's annoying, but yeah. So we broke down from this ascending level of support, and it back tested it. So we came to this. It held as support. Back tested this. It held as resistance, and now we came all the way down. Okay. So now where we're at right now is we're just kind of at this resistance line once again. Now I'm going to zoom out, and if you're going to trade this asset, if you want to trade ADA, then I recommend that you draw these lines on your chart. It's very important. So first of all, I would recommend drawing this horizontal level right here. This is around 17 cents. So just at the top of these candle bodies, that's where I would draw it. The second horizontal line I recommend that you draw would be right here. And this is the one we're fighting with right now. I have that at so you could do it around 30 cents. Or maybe just to get it accurate, just draw it right below this candle body right here. That seems to be the main level. As you see here, it was resistance. So yeah, and basically, if you want to know if this level breaks or not, look for a break of like a candle body either breaking above or below it on the weekly time frame. Now you see, it's possible that, for example, right here, the wick comes down. So on the daily time frame, on a 4-hour, it's going to look like it broke it, but no, pay attention to where the candle body closes in relation to this level, right? This 30-cent level. Okay. Now, also on the macro, one really positive sign. So you had this falling wedge breakout, typically a bullish pattern. I mentioned this in the last video, but I'll mention it again. What we have here is like a double bottom, but it showed a bullish divergence. So look at this. So these two oscillators, you have a low, then you have a higher low, again, low, higher low on these oscillators, but the price, you had a low and then a lower low on the price. So that's a bullish divergence on the macro weekly time frame. So that's a very good sign that this may have been the bottom right here, right? Double bottom could be in, and now we're just kind of in like a rangy market where, I think the big money is trying to shake people out of their positions, and they're just trying to make the market as annoying and frustrating as possible, and they want people to sell to them in this low range, right? That's why we're just in like a very choppy market, and a lot of typically bullish patterns, they're just kind of breaking down, right? So yeah, it's an annoying market phase. The halving's not till April, I think, 2024. So this could last quite a while. But anyway, where we find ourselves right now, yeah, we're just basically this previous level of support is now resistance. If anything, I would look for long. I would rather than take a short right here, I would rather break above it, retest it, then take a long, and I would target this range right here, right? We could probably get some resistance at this this horizontal level. So would be right here, horizontal line, the top of this candle right here. But ultimately, I would like to target the top of this this range, right? This upsloping level of support, now resistance. That's where I would target. So theoretically, if we're able to close a candle above this this level right here, I could look for a long position. And let's say if I entered right here, target up to this line, and I could have a very tight backstop below this level. So, this trade would be a 1 to 5 risk reward ratio, meaning for every $1 I risk, I could potentially get $5 back. In percentage terms, I would risk 1.09% to get 5.57% to the upside. So yeah, that's a very good trade that I might look to enter if the opportunity presents itself. But guys, you see how clean this particular asset is trading? It's really respecting these levels, particularly the weekly level right here. It's just like it's just clear, like support, broke it, came back to retest it as support again, broke below it, it was resistance, broke above it, it was support for a while, broke below it, now it's resistance. It's really respecting this line. Right now, this is the most important level on the Cardano chart. So if you're trading Cardano and you don't have this on your chart, I don't know what you're doing. So yeah, draw that level on. And yeah, so guys, people, you could take a short right here and place a stop loss just above these wicks right here. That would work. Maybe target the lows. But for me personally, I would rather see a break of this, a candle close above it, than I would look for a long up to this range, right? That's going to give me the good trade, the 1 to 5 risk reward trade. That's what I'm looking for. And ultimately, once this level breaks and we start closing weekly candles above it again, hopefully that will be the time where we can make a much larger move to the upside, right? Because yeah, obviously this is getting pretty annoying. If it breaks down, like if this wasn't the low and it goes further, then yeah, you have a big level of support right here at 17 cents. I don't think that's the case. I don't think that's going to happen unless we get some crazy catalyst. But yeah, I think the low's in. And yeah, it's just kind of annoying, choppy market. Now I'm going to change the chart and let's take a look at, I'm on a 1 hour time frame right now. And basically I just identified like this kind of range here. So we had like this previous level of resistance. So we had 1, 2, 3 rejections from this level right here. We recently broke above it. So as you know, you break above a resistance like this, you can come down to retest it as support. So this could be a potential trade setup as well. If the price comes down here and you start noticing some bullish candle formations, maybe a doji, maybe a bullish engulfing of some sort, you can enter and then maybe target this upper range right here, right? So, let's see what that would look like. You enter a long, say right around here. You place a stop loss below this support or potential support. And even if you targeted the previous day high, that would be a pretty good trade. That would give you a risk reward ratio of 1 to 4, right? That's very good. You'd risk only 0.51% to potentially get 2.06% to the upside, right? So that's another trade you can look for, a potential long. Obviously, if it breaks down there, you would get stopped out right here, so you wouldn't really risk that much. And then the next level you want to look to enter a long would be down in this lower range right here, right? And then you could target the upper range. So let's see what that would look like if you entered a long down here. So you would have lost 0.5% here, but maybe here you can make it up. So you place the stop loss just below this level here, and then you would target the top of this range. So that would give you a risk reward ratio of 1 to 3.36. So that's pretty good. Risk 0.48% to potentially get 1.62% to the upside. And of course, you can amplify that with a little bit of leverage if you want to. But yeah, guys, some potential trade setups for you. Overall, the macro looks pretty good. We had a bullish divergence. We're under key resistance right now. I would look for a close above the that line, this line right here, 30 cents to really get bullish. But and yeah, here's some potential trade setups for you on the smaller time frame. All right, guys. Hopefully that helped, and take care. Have a good day. Oh, and yeah, and once again, if you're not subscribed, subscribe, click the bell, and then click on all. All right. Have a good day. Bye.